Tuesday morning, as you all know, November 15th. Coming at you here from the beach in LA with Dr. K here in Los Angeles. Dr. K, say hi to them.
Hey, everybody. Right next to Gil here.
So we're all hanging out here on the beach and watching the market go nowhere. What was that? That's the phone you have in London. What's that thing going off here? Oh, okay, there it is.
Wait, go ahead, do your intro.
All right. Anyways, everybody, we're sitting here trying to stay awake, watching this market chop back and forth. You're looking at the NASDAQ Composite daily chart that I've got here, and you basically see this thing bouncing around, resistance event, the 200-day moving average. Not a lot of real trending movement. So you're basically, you can see on the chart, you're in a trendless environment, so that kind of drives you nuts if you're trying to make money. But, our position has been to take things slow, try some trades, and if nothing works, you just don't really bother with it. We tried some of the shorts with Amazon and Apple, and Apple's come down, and that's worked, but it's still bouncing around here between 380, 390 roughly. Amazon, we try to come after it, goes down into the low, 210 area and bounces back up towards 220. So net, it's really hard to make any real progress here, and that's okay. We're just hanging back and let things kind of develop and see where we go. The interesting thing here is that even with a lot of bad news coming out of Europe and a lot of news on a day-to-day basis coming out, the market doesn't really want to blow apart. It doesn't want to go up either. So the way we see it, the market's just trying to figure out whether QE is going to win or whether all the problems. So you basically have a tug of war going on between QE on one hand and whether or not we're going to see more QE versus all of the problems that beset the market currently. And you're just kind of in one of those zones. Now, a lot of people are looking for the market to rally into year-end, as it generally does following October, going into the end of the year. So maybe the crowd is set up here to to get full. Who knows? But we'll see what happens here. For now, you're just watching these indexes. You're going back and forth. Volume is drying up in here. Yesterday we saw volume dry up on the NASDAQ as you had the pullback. Today you're trying to come up, but you're also running light volume. Or actually, you're running heavier volume today, and you're slightly up. So it's trying to get support in here. You might come down on top of this zone here, right on top of this whole area that was in back in August to September, October. So you're basically holding on top of that overall. So I would say that net, you're just looking at a market that's trying to figure out which way to go. And in the meantime, I think you just have to lay back and be patient. As we talked about last week, we're looking for a window of opportunity to open wide, and there really isn't anything that opens wide. Things start to move to the upside occasionally, and then they don't follow through. Then they start to move to the downside, and they don't really follow through there either. So, Dr. K, what's your take on the market right now?
Well, yeah, it's a nice schizophrenic market, as I've ever seen one. It started off in late August, and it really can't seem to find direction. I think there's a tug of war between quantitative easing, which is now in full measure coming out of Europe to the tune of $1.4 trillion over time, in addition to the Bank of England increasing their line from 200 to 275 billion, plus of course whatever the Fed does in its own stealth manner. So you got that factor that props the markets. The markets are being propped because you have deleterious conditions like an expanding TED spread. That is indicative of a problem ahead, and yet the markets have managed to rally despite an increasing TED spread. That tells you QE is being pumped into the system. Now, we still get gap downs because we get news out of Italy, news out of Greece, news out of the next domino that could potentially fall. So we get a very gap up, gap down oriented market, and that makes for a very treacherous trading environment. Fortunately, as I've said many times before, these periods always come to an end. They don't persist at length. So it's just a matter of being patient, and if you choose to trade in this environment, to position size appropriately.
Yeah, I think for the most part, we're just going to be getting ready to head off to Las Vegas tomorrow, close to the close, and we'll be presenting, as you know, on Thursday for an hour at 1:15 p.m., and then we're doing a 4-hour intensive hands-on, and we may even include feed-on workshop on Friday for 4 hours. So we're hoping some of you are going to show up for that. And just to kind of tease some of you who are coming, we know that some of you are going to show up, and we're looking forward to seeing you. The idea is going to be, since we are doing the workshop on Friday for 4 hours, 8 o'clock to noon, during market hours, we're going to try and incorporate what we're talking about into what we're seeing in the market at the same time. So we're hoping to make it a real-time, hands-on, feed-on, whatever else you want to put on it type of workshop. So we're looking forward to that. But that's what we're going to be doing on Friday, so we're going to see that things are going. But, of course, we're moving into long holiday season starting with Thanksgiving next week, so we'll see if things just kind of slow down or if the market just melts up to the upside. Anyways, the big question everybody's asking is, can I add to gold and silver? Can I add to gold and silver? This is a, what is this here? It's a weekly chart. Let's go to the daily chart. Can you add to gold and silver? Dr. K, can you add to gold here?
Depends on your position exposure at the moment in relation to what you consider a big position size. Depends on where you bought your first position. Let's say you bought your position back when it was trading, if GLD was trading below, in the low 160s.
Down here.
And yeah, and you have a rule that says every time GLD will go up X%, you're going to add to your position. So if that X% has been achieved, then sure, you can add to your position. If you haven't bought GLD at all, you could still buy up here. You could still start in with a small starter position and have that same rule applied. In other words, if GLD goes up X%, you're going to add to it. You can double the position. If you buy 5% positions or 10% positions, you add to it by that much. Or some people like to do a sliding scale. So as the price rises, they buy less and less on the way up. Either way works. You just have to find something that fits your trading personality.
Yeah, I think you can do it one of two ways. You can either be buying on strength, as you move up to the 50-day on the pocket pivot here. You had this pullback, for those of you who like pullbacks, and if you recall, this day we were doing a webinar and we were down here on the gold, and I told you I thought it was buyable on that pullback. I still continue to believe that gold is buyable on pullbacks. You can see you had a 3-day pullback here, but volume dried up. You close in the upper part of the range off the 50-day moving average. Now you're holding the 10-day moving average. It looks like it wants to go higher, but when it's going to do that really depends on how much of a factor this overhead or area of congestion you can see between 175 and 185 roughly on the GLD, corresponding to the highs that we saw in gold back in August and September. How long is it going to take to get through this overhead? And that's kind of what you're looking at right now. And it may just need to go sideways for a period of time. So we're kind of hanging out here. And I'll just tell you how I handle a position in GLD myself. I have 4 different accounts, of course. One of them we run with Dr. K, and we use the model strictly. And then I run another slower one that stays mostly in cash most of the time, at least during 2011 because of the just a choppy environment. But I bought an initial position here, and then I added half again as it was able to clear this peak, because you got above the 50-day, and then once you're able to get above this peak, I felt like you could add here. At this point, myself, I'm looking at the 50-day moving average as an area of support that I would look to hold. Dr. K, how would you handle a position here in GLD with respect to the moving averages? Are you using the 50-day, or are you really using the 200-day as your ultimate stop-out?
Right. Well, you can use either, again, depending on your time frame. Knowing that GLD, well, gold has been in an uptrend more or less since 2001. If you're a very long-term holder, you can use the 200-day as your stop-out point. Again, if you have a very heavy position at this point, I wouldn't wait for gold to go all the way back down to the 200-day before selling any of it. You could use the 50-day as a guide. That's certainly a viable guide since GLD tends to show it obeys the 50-day when it goes on a run. Keep in mind that since it's still in the middle of its basing pattern, as it goes higher, it's not generally going to go higher in a straight line like when it really gets going out of the base. So what we're probably going to see is 3 steps forward, 2 steps back, in that kind of rhythm as it approaches 180.
Any steps sideways?
Yeah, lots of those as well.
All right, we'll shuffle it to and fro here. Just to point out here, I told you guys where I first bought here, then added half again here. Of course, you get this pullback here that you got to sit through. Now what I'm looking for is as you're sitting on the 10-day line, any pocket pivot on the GLD off of the 10-day, if it occurred, it doesn't have to. You could just go sideways for a period of time. But if I did see something like that, that would be my 3rd add point. And I would add half again, so I'd have a double position with a pretty good cost basis and see where it goes. But, every time I go on Fox, and for those of you who saw me on the show last Friday, they're all trying to cross me up with a lot of questions about the dollar and oil and blah, blah, blah. And I think the bottom line is this, and that is that I don't care what Ben Bernanke says. He says gold is not money. It's not currency. It's not an alternative currency. Yes, it is. Central banks around the world buy gold, and they add it to their reserves, and they count it as their reserves. So if it isn't currency, I don't know what the hell it is. You know, it's certainly not, you know, Lego blocks, that's for sure. But in any case,
let's hear it for Fed speak.
Yeah, but I think, you know, they just say that because they are concerned about a mass migration away from the dollar. For now, the dollar remains the tallest midget, but at some point, does that really come into play, and do people start dumping the dollar here? And that's always a possibility. And I think that you're going to see further declines in the dollar come into play at some point. So the long-term case for gold is up, and regardless of whether it corrects or pulls back, you know, gold's holding up nicely, and it's been moving up, but the dollar's also been moving up since the end of October. So where's the correlation in terms of trying to assess where the dollar is going and using that as a pointer or a directional finder for where gold is going? I don't really think that you can do that. They tried to ask me that question last Friday as if there was an answer, and there really isn't. As far as I'm concerned, you just watch what gold is doing. And right now, if you try to gauge where gold is going on the basis of where the dollar is going, well, it isn't going to do you much good because the two are kind of correlating these days. And, of course, what does that argue for? That tells you that they are viewing gold as an alternative currency, given the fact that there's some expectation that the euro may dissolve, or the European Union may dissolve. So that's kind of where you're at. They look fine. We prefer gold over silver. Silver's trying to work its way up, but you see it's getting some resistance at the 50-day. Maybe it comes out here. I'd watch for some kind of pocket pivot coming up through here, coming up to the 50-day. But silver's it's got a lot of overhead here. Look at this area from back during spring and summer, right around the 34 level on the SLV. You got some overhead to work through, and that's a lot more if you put all this in aggregate, this whole area, for it to work through as it's coming up. So, you know, we think the GLD really is your best bet as far as the precious metals go. So that's where we're going to stay for now.
Yeah, too. There's of course DGP if you want to play the 2 times GLD, and then they also have what is it, UGLD, the 3x ETF now.
UGLD.
Yep.
UGLD. Okay, that looks interesting. I don't think I'm going to play there. What is that, 3x? Wow, that looks like fun.
But it's stretched on the axis, so it looks even more volatile than it really is.
I follow you.
But it's a pretty good, accurate assessment of the 3x.
Let's look at some stocks here. People asking about Amazon. And, you know, Amazon, we keep thinking it runs up into the 50-day, bounce off the 200-day, runs up into the 50-day. Shortable in here, maybe. It really depends on what the market does. If the market starts to break down, then I think Amazon's coming with it. Otherwise, it's trying to hold up in here. The one thing I didn't note on this, let's go. This is supposed to be a weekly, I think. No, where's my weekly chart? Let's get rid of this one. This is my daily here. So this is what Amazon looks like on a weekly chart. And remember that the theory here is that you have a sell signal. 2 down, 2 up. Okay, so on that basis, we're going to postulate that Amazon is top. Now, what disproves that theory? Getting back above the 50-day or the 10-week moving average. The fact that it can, I still think, puts it in play. And I think it is shortable on rallies up to the 50-day moving average with the idea that it's headed for this low probably, if in fact that happens. There's a lot of good news around Amazon right now. They're actually doing pretty well with the new Kindle Fire. We have Kindle at home, and it's pretty popular. We also have a lot of iPads around as well. But it's not a bad little device for what it's supposed to do, and they're showing strong sales and strong consumer interest in the new Kindle Fire, whereas a lot of people are saying in surveys that they're not going to buy an iPad, they're going to go for the Kindle Fire. So that's really where that's at now. The thing is, if you try to come in short it, you have to use the 50-day around 225, 10-week or 50-day as your ultimate stop. You know, I've been coming in and dinging it every day, and it doesn't go anywhere. So it'll probably blow apart the day that I'm not testing it on the short side. So, but that's the theory there, and the same thing holds for Apple as well, because you are looking at 2 down and 1 up to new highs. You could say 2 up to new highs, and this second week you reverse. So now you might say this is a sell signal, and now on the basis of the breakdown through the 10-week or the 50-day moving average, this becomes a short. Okay, that's your theory, and that's the basis. Again, it's like Amazon. You're using a general macro theme here, which is 2 down, 1 up. That's the sell signal. So you're operating on that basis. What disproves your theory? A move back above the 10-week or the 50-day moving average around 394, 395. I'm actually looking for Apple to rally. I was short the stock, breaking down here, make some money on it. I mean, it's nice points, but percentage-wise, it's not really that big of a move. The thing is, you're running into this area of congestion here right off the 380 level, and so you're bouncing here. This morning, what does our volume look like on Apple? Running very heavy, you know? I've got to pull up my other system here so I can look at that. But I don't think it's really
right
that
now we're
heavy.
at minus 9%.
Yeah, so you're running a lighter volume rally today. Let me get that off of there. But let's see. So I'd be looking at this as a possible shortable rally if the volume stays low. But I'd be looking for it. First thing I'd look for, I don't have the 65-day moving average up here. Let's put that up, just for fun. Moving average, simple. Anybody uses a signal, this is how you put your moving averages up. Hopefully you know how to do it already. And we'll make it black and make it exponential. And I like to use this when I'm shorting. You'll notice you might get a rally back up into 389 at the 65-day. That's a possibility. The last bounce here stopped there, stopped short of the 65-day exponential. So that's actually my first guide for trying to short a rally. I'd look at that as being a spot to come in. So I'm not sure if it necessarily works, but that's what I'd be looking for. It makes sense for you to bounce off this little congestion area. It may not be very much, but the theory here also would be that if Apple fails, and if Apple breaks down and heads for the 200-day moving average, it's probably going to take the market down as well. But those are really the two main shorts I've been looking at. A couple other things to look at. I thought this was an interesting move yesterday, and I'm testing this out today on this bounce. I got pretty heavy short CRMs coming in a little bit for me so far. But you notice it's stalling out at the 200-day moving average. Now, they come out with earnings on Thursday. There's some expectation that they'll beat on sales, but it'll be the usual loss that they're going to post. So some are saying they need to show something significant. I'm looking for this to fail over the next couple of days before earnings come out. If it doesn't, I may, hold 500 shares or 1,000 shares into earnings just for fun. I wish I had done that on Green Mountain the other day, but I didn't. But in any case, this one's running up in the 200-day. It's definitely resistance here, and you might look at the pattern. Let's go to I don't know if this turns into here's the left shoulder, here's a head, and now you got a series of right shoulders. You do have decent upside volume on the weekly, so I'm not sure whether this is that viable, but we'll find out soon enough. And it's kind of a quick trade for me, but that's one thing I'm playing around with today. Let's see, Netflix. People ask me about that all the time. It's kind of, ledging here. Does it break down or does it rally back up in the 50-day first? My theory is that longer term, you're going to see Netflix go lower. Just like Green Mountain, I thought I'm heading for the 40 zone, the low 40s, and I'm actually on record as giving that as my ultimate downside target price for Green Mountain a 3 weeks ago. I didn't expect it to get there so fast, but it did. But I think you can see Netflix get down closer to 60 or below before it's all said and done. And I don't really see them. There's talk, Whitney Tilson, who was short this thing all the way up. Now he's getting long the thing on the way down. You got to love this guy. Myself, I just went to Stanford. I didn't graduate from the university if I'm smarter than the market. But apparently he can counter-trend things all the time, and I would actually fade this guy. I think this thing could go lower. And on that basis, I'd be watching for some kind of rally. Maybe it fills this gap, maybe not. But I'm actually testing a little position here today. It's really got, it's kind of sitting there, not really going anywhere. So not really sure if this will prove out. But I'm just taking small positions, messing around. For the most part, there's really not a lot out there that looks all that exciting on the short side. You can look at Cena, for example. And it gets resistance at the 80 level, so it might be shortable on that basis. Notice, though, that selling volume here is drying up, so I don't know unless you see a pickup in volume to the downside. I don't know if it's going to head for this low yet. But see, that the whole thing, when you're looking at shorting as well as going on the long side, it's all within the whole market context of where this market really going. Is it trendless? If it is, then I don't think you make a lot of progress one way or another. You're just going to hope to be in the right position when the market does decide to move one way or another, if you're going to play it that way. Or you just hang loose and wait for the window of opportunity to open. So I'm going to go through some more questions. Alexion, we pointed out yesterday, was a pocket pivot. And like most pocket pivots, you have one nice up day, and it's not really going anywhere. I mean, with that, you buy a little position here, and you use either violation of the 50-day or yesterday's low as your quick stop. So that's one thing to be looking at in that regard. As far as that goes, it might not take off. This thing's already had a nice move. So another one we were looking at is VMware, but very typically it's holding up pretty nicely. But this stock will move up and yank back, move up and yank back, and do that over and over again as you acquire more and more gray hairs. But here you're starting to break out. It still could just end up building a base. It doesn't have to necessarily go anywhere. But this looks pretty good, pretty constructive. The one thing I did like about VMware on the weekly chart, notice how the last 3 weeks, and one thing that you should do, when the market's volatile the way it's been, it's easy to get your head all spinning around and you're not able to figure out where things are going. Just go to weekly charts and take a look at some of the weekly charts and see what they're showing you in terms of, sometimes they crystallize out some of the volatility. So for example, we know over the last 3-4 weeks the market has been really choppy, and VMware, every time the market comes down, it has come down, but it's closed every week almost at the peak of the range for the prior 3 weeks. So all these long tails are just telling you that even though the market was volatile and even though it looked like this stock wanted to come down, it didn't. It held up. So this is actually pretty strong right here. Now the other thing is you have a double bottom. This second low never undercut this first low, so I don't know if that's a flaw that's going to have to be worked out. But so far you have this breakout through the top of this double. If it's a double, this W rather, if this is a breakout from a double bottom. But look at how tight you're holding up in here. So it looks pretty pretty robust, and so it may want to go higher. So keep an eye on that one. Let's see. Why would LinkedIn drop with news of additional offering when from the get-go they said they were only offering a small portion of their stock at the initial IPO to begin with? Well, there isn't. If they announce a secondary, that's just what happens. They announce a secondary, and there's going to be some supply coming into the market, and the stock rolls over and comes off. So I wouldn't get into really worrying about why. If they said it's only a small part of the stock float or the total outstanding stock, whatever, the thing has come down. And you're now down at the lows of this base. You got volume picking up today, so that doesn't look too good to me. So I don't think I'm messing around with this thing anytime soon. I just stay away from it. Notice how you had pocket pivots up in here, and we picked off this one. We thought this one had a better chance of working, but when the earnings came out, it broke down. You had to be stopped out at the very least at the 50-day moving average. So I sure as heck wouldn't be trying to sit with a position here with the stock coming off right today on a gap down on heavier volumes. So I'd let the air clear. Fusion.io. I like this name. It's acting pretty well. Moving up again. It's very volatile, so you want to be looking to pick this thing up on a pullback, I think, rather than buying into strength, because you buy into strength and they just wiggle you around all over the place. But this one acts okay. The only thing is they're doing a secondary as well. And it simply may be that it needs some time to build a base. You went straight up off the lows of this base. This thing is like 59% deep. So
yeah, it's an IPO. It's going to get wiggled around a lot more than your normal stock, and especially in this kind of environment. So even though it had a pocket pivot just recently, just yesterday, it had a mid-bar close, which is not that convincing. And second of all, it tends to form a lot of V shapes within its pattern. So if you're buying late, you could easily get whipsawed out of the position. Therefore, in this market environment, it wasn't prudent to go ahead and call the stock actionable yesterday. I'd like to see the market, either the general market improve or the pattern in FIO improve to where the risk reward is more favorable.
FTNT, that's what the people ask about. Fortinet is trying to come up around. It's like TIBCO. And we like TIBCO. Yesterday, you got a pocket pivot, and I thought that was a pretty good breakout. It's a cup with a 2-week handle, so you break out here. As long as it holds a peak in here, 29, say, what's the high here? 29.27, and then the high over here is 29.56. So I would say any pullbacks down into here would be good to see. And the stock hasn't broken out to new highs. It could go sideways and build a handle here. So really not, besides, in spite of the breakout, it's going to take off well if the market does. So we really like this name, though. I like TIBCO. I like Fusion.io. I think you may need to keep an eye on RAX, because it's coming up and it's building a handle here, and you're seeing some pretty good volume today coming in on this breakout, and then you pull back and the volume dries up, and now you're starting to see it come back up to the 43 level. It's acting okay. This is definitely one to keep an eye on. They beat estimates, and stock's trying to come up and around. And if you call this a double bottom, this did undercut the first low, so this one actually looks okay as well. May even be viable using yesterday's low or the lows along here, just under 42 as your guides, downside guides for a stop. So you want to keep an eye on that one, I think. Let's see. But I think Fortinet, is similar to a lot of these in that you're seeing them come back up and around. And it almost seems to tell you that that's constructive for the market. So, the market seems like it wants to go higher. And you just have all this news and all these crosswinds keeping that from happening. And I think that's really what's going on here. And eventually you're going to see some of these stronger acting stocks really move. And I think you really need to focus on stocks like TIBCO. Whoops, not TopCo, TIBCO, DIBX, and Fusion.io. And keep an eye on RAX. That's also acting pretty decently. So for now, LinkedIn is out of the picture. We don't really care much for that. Should the news about Buffett buying IBM hold any weight? No, not at all. Why would you? Don't buy stocks on the basis of somebody else buying it. Warren Buffett never bought technology, and now he's buying IBM hugely. What you do is just use your own rules for buying stocks, not
Also,
not using Warren Buffett is. I got to tell you, and forgive me if I sound arrogant, I think that's probably the dumbest thing to even think about. It is, Warren Buffett's buying stock, maybe I should buy it too. Yeah, sure, like you could buy Coca-Cola like you did in the 2000s before it tanked. You could buy Solomon Brothers like you did before it tanked. And then he's long Bank of America. Yeah, he's doing really well with that. I think this is when he announced it. He's not, so
he has a different time frame, and keep in mind he missed the big dot-com bubble move. He completely sat out the market. If you look at Berkshire Hathaway performance from 1996 to 2000, it was pretty dismal. It wasn't. I think some of those years he was flat or even down. So he's a different style, totally different approach to the market. And it's because his time frame is so long, he can go ahead and say, I'm going to buy GE in 2008. GE fell quite a bit further. I think it fell something like another 30 or 40% from when he started buying it. But he's capable of just sitting with a position if he believes in it, sitting with it for months into the years. And that's not our style. In fact, I don't think that should be really anybody's style because head-to-head, someone who is applying our strategy is going to outperform Buffett every single time. William O'Neill's strategy, as an example, William O'Neill's style, his average returns are much higher than Buffett's average returns. The advantage of Buffett's style is that you can trade a $30 billion account and use his style, whereas the strategy we're employing probably has a scalability maximum of a few hundred million.
Okay, let's see. Is there a risk of another company buying Netflix? I guess there's risk of anybody buying Netflix, but I don't see that happening just yet. There's actually some good articles about whether Amazon would buy them or not, and I think that article actually pointed out that it would be Reed Hastings' dream, but Jeff Bezos' nightmare. So there's no reason for Amazon to buy them out. No reason really for Apple to buy them out. Like I said, I'd probably wait and let the stock come down. Let's see here. Some more questions. Okay. Baidu, you know, it's just kind of going sideways and not really doing much outside of what the market's doing. So, you know, take it from there. I think it's just moving sideways. So we don't see any buy signals. If we did, we would point them out. Spreadtrums, when people talk about it's kind of a smaller, thinner stock, so not really one that I will play, but it's acting okay. So you have this pocket pivot type move right here, continuation pocket pivot. And that's acting okay. So looks fine. Nothing really fancy other than that. We talked about FIO. You know, and you notice UA, Under Armour is acting okay. It's still holding the breakout. Nothing spectacular here. But if you look at the weekly chart, what you see here is just holding tight in here. You got a big volume breakout. That looks good. You undercut all these lows in here, so that kind of washes everybody out and kind of clears the decks. And just kind of holding it. Notice how you close up off the lows here, so you're getting some support on the pullbacks to the top of the base. It's acting fine. Probably buyable in here if you think the market's going somewhere. You know, you use the breakout level at 80 probably, or this low here on this week, which is 79.41 as your guide for a stop. And that's pretty much the story on that. Nothing really too tricky there. Ulta, similar situation. Just holding the top of this breakout. So no real, you know, nothing spectacular here. You got a nice volume breakout here. You got a pocket pivot type maneuver here. So you're just sitting there, you know, volume drawing out. But you can see a lot of these patterns just show you what's going on with the market. The market's sitting around wondering what to do, and that's kind of what's going on. So, and the chart pattern's reflected. But I think if you're looking at some of these stocks, then these pullbacks are what you want to be buying into, I think, if they're acting okay and holding support levels. So, price line, somebody's asking about. Slow, it's trying to break out, you know, it's just setting up real tight, and so it's holding up. Again, another situation that in many ways is defined by what's going on with the general market. It's trying to go higher, but it doesn't make some progress, pulls back, goes sideways. But it's acting okay. There's nothing wrong. Somebody's asking about Wynn, and somebody did be pretty well with that on the short side. Remember, it did come up in here on the 50-day. We were talking about it there. It's broken down, undercut this low, just barely, I think. 117.40 here and 117.37. No, it didn't quite undercut it. But it got down into these lows, and now it's bouncing back up into this area. 130 might be a shortable zone, if in fact anything in this market is shortable. So, but we'll see what happens here. Alexion, we talked about that. Baidu, US Air. I don't know. US Air doesn't really show on my screen. Hey, Dr. K, do you look at US Air, or is that just not on one of those stocks?
What's the ticker on it?
What is the ticker on it? You got me. What is the ticker on there? Whoever asked about that wrong. Well, I don't know. But I don't really care for any of the airlines. So let's see. Google is interesting, I think, because Google is had a little pocket pivot here on Friday of last week. You notice we had a couple little pocket pivots. One here, one here. Google is interesting in that it is a big stock and it's a big NASDAQ name, and it's trying to come out of this big, ugly base. You might like to see it get a little tighter here, but notice how it has been acting pretty well. And looks like it's just trying to come up, and nice and slow and steady, and maybe it's giving you a clue that Google is ready to take on a leadership role if the market's able to start some kind of up leg. Interesting thing about Google is that it is coming out of this long, this is a weekly chart, so you're coming out of this long structure. After they came public in 2004, and they had this massive run here all the way up into the top in 2007. Let's actually make this small.
Those days are over. So if you're playing
Yeah,
Google with the
see.
anticipation that'll return to that momentum, it's not going to happen. But that said, it's a slower stock which is setting up potentially for an uptrend, albeit a slower one.
So, you know, you're trying to come out of this big structure. I don't know if it's going to or not, but it's kind of a slow name, so wouldn't really worry about it. If you want to buy it, I suppose you can. Why do you watch time of sale on quotes? Where do I have time of sale on my quotes? If it's on there, I have no idea what you're talking about. Do you see time of sale? Why do I care? I don't really care. You know, I think maybe some of my quote screens might have something like that, but it's only because sometimes if I'm looking at the futures on the weekend, I want to know that they're trading, you know, in real time. So sometimes to have the time there on the index is actually that may be where I keep it. Somebody says, okay, scrolling time and sales. Oh, over here. Oh, I just have that running because it looks cool. So, and to see who would ask. You're talking about this over here. Just, you know, just something to look at. I don't really pay much attention to it. So, it looks cool though. Yes, every little thing on my screen is a secret magical thing that I use to make money without ever screwing up. So, well, somebody's over here trying to you notice that's Kevin Martyr trying to contact me. Let's see here. That is what I thought. Good. Yep, you got it, Tom. And in fact, you know, when we have clients come into the office, the joke is we create these really complex-looking quote screens, and they look really cool and really intense, but we don't use them for anything. We just put them all up. You know, you have 10 screens up. People come into the office, and you know, it impresses them if they're dumb. The smart people really recognize it doesn't make any difference, so there's really no reason to even think twice about it. But it is interesting whenever people see any of my screens and they see certain things, and a lot of times I just throw things up. Remember, Bill O'Neill used to keep a screen that had about 20 quotes total on it. So the bottom line is you don't really need to look at that much unless you really need to. You know, Dr. K just looks at one screen of quotes, so not really much, not much there.
Yeah, actually, I find it actually more efficient just to use one screen and flip around on the windows as opposed to having a lot of screens surrounding myself. And it's also nice being on, if I'm on travel, that I don't have to use a second screen. So I'm so conditioned to using just the laptop screen.
Yeah. Oh, is US Air a Buffett purchase? So that means we need to look at US Air because Buffett bought it? I think he should be looking at the stocks we're looking at. So why doesn't Buffett ever buy gold? We do wish, though, that we could get up on TV and pump our positions like Warren Buffett is able to. Let's see, any other questions here? Come on, people. It's a pretty dull environment. RMH keeps trying to come out, but it can't. So, you know, it's the same old story. A lot of these patterns, if they're acting constructively, they're fine. So, you know, we're looking at UA, ULTA, FIO, TIBEX, even RACS, you know, Priceline is acting constructively. Intuitive Surgical continues to act fine. You know, and this is one of your better looking stocks. You know, these act fine, and as long as they're acting fine, they don't necessarily have to go anywhere, but they could just be revving up, waiting for the market to determine where the next trend is going to be, and then they go with it. So, you know, a lot of these things are acting pretty well, but I can't tell you whether this is, you know, one stock or another is going to be your next hot ticket to a double, you know, in 3 months. I tend to think that you want to focus on newer merchandise in any market cycle, in any bull rally phase or rally cycle. because that's usually where the big moves will come. So I look at Fusion.io as new merchandise. I look at Tibco also as new merchandise because it's really just a $30 stock. Had a nice move after coming up off the lows in 2009. Now it's building this big, ugly base. Well, it's looking prettier now with a nice cup with handle. And I would be looking for this to potentially move higher as well. So that's kind of where we're focused in terms of looking for newer names. And I think that's where you want to stay rather than trying to get excited over some of the bigger names. Like Google is fine. It goes higher as well, but I don't think that it has as much upside juice as a Fusion.io or a Tibco might in a strong uptrending market.
Can you expand that out? Should be able to.
Can't, believe it or not. It's this tiny little screen.
We got to write those
and
programmers. That's a line of code there.
Yeah, the IM window on GoToWebinar is basically we can see 1.5 lines basically. Should I bet on red or black on roulette wheel when I get to Vegas? Neither. Play craps. That's what I prefer.
Or count cards.
Count cards.
At least that puts the odds in your favor. Just don't get caught.
Does it matter if you trade in odd lots or round lots? If things work for you, I don't see why it really matters what you trade in at all.
These days it doesn't really matter whether you're doing round or odd.
So, anyways, not a lot of questions, and I think for good reason. The market's just kind of tracking time here. But this is where where I'm focused right now, and where Dr. K is focused. We like the precious metals. We like gold. Okay, silver. And we do have a smaller position in silver, but we like the gold primarily, and that's pretty much the only thing we're long right now. The short side, we got a few ideas we talked about, but whether you get any traction on them is kind of going to be the luck of the draw in terms of where the market goes, the general market from here. Now, on the long side, if we're sitting around thinking that we might get a new up leg in the market, and we think that would be confirmed by a high volume move up through the 200-day moving average on, say, the NASDAQ composite. So, high volume move up through the 200-day, the red line here. Maybe I should make this bigger. There we go. This is a weekly chart of the NASDAQ too. Notice how while the NASDAQ's going sideways, you notice how it closes. The last 2 weeks, the closes have been up in the upper part of the range. So you can see that it does get support, and it's trying to get through here, but you got to wait for some kind of confirmation of that. We think we'll get that, and it will generate a buy signal in the model. In the meantime, where you want to focus are going to be the stocks. We like FIO, we like TIBEX, and TIBEX is a new breakout, so that's very much in range and very nice. Nice base here. I like this base. It looks okay. You could say the handle's not really pulling back and wedging along the low slide, but that might just mean it goes sideways for a longer period of time. But other than that, that looks okay. And you might also look at RAX. RAX is setting up. You're getting a lot of these type patterns. VMware also coming up. So these stocks, really, that's kind of my small buy list. I like UA as well in here. On the pullback, could be viable, and ULTA. But my style is to be aggressive, so I'm kind of laying back. And you can see how a lot of these things are acting fine, but they could go sideways for a period of time. So I'm just laying back for some confirmation from the general market, and that's really it. So anyways, that's really all we have, you guys. I think it's more a matter of exercising patience. If you want to take small positions in things that act well, and as long as they continue to act well, like the UA and the ULTA here holding above these breakouts, it's okay. You may get stopped out. You may lose a little money. We tend to think that we can sit around and wait a little while and let things develop here, right, Dr. K?
Yeah, just this is a good test of one's patience. These types of difficult, challenging, go nowhere markets.
Yeah.
But for those of you who keep trading journals, this is also a good learning experience because it's a test of your own levels of patience, and you can record your own thoughts and then come back to them when the dust is cleared and we've gone into a new trend. And you can see what you've learned during this difficult period, because there will be future difficult periods, future trendless periods, and so it's good to know what your mindset is during these periods, so you can condition yourself to practice patience and not overtrade.
Yeah. So anyways, that's all we got, you guys. We hope to see some of you in Las Vegas. well, we'll be there tomorrow, but we're presenting on Thursday and Friday. So we're looking forward to seeing those of you who do show up. And if any of it is posted, I think is the Thursday presentation going to be simulcast on the web. You might check Traders Expo website for that. If we have any links for that, we'll let you know. But they may be simulcasting that on the internet at the same time on Thursday. So on that note, you guys, just be patient and wait for us to give you the next signal, unless you feel like you have to nibble on some of these stocks that are acting constructively. All right? Take care. We'll catch you next time. So long, everybody.
The organ